All right, good evening, everybody. Hold on, let me put on my microphone here. I want to welcome everybody back to Walks on Wall Street. Today is May 12th, 2023. It is a Friday, and it is also 8:42 p.m. Eastern Time here in the beautiful, the gorgeous South Beach, Miami, Florida. So it's going to be a little bit of a different live stream in comparison to yesterday. Yesterday we were in the big city. We were in downtown Miami and Brickell. So I think for those of you who are new to the live stream, this is going to be a little bit different. This is South Beach. It's a more touristy neighborhood. There's probably going to be a lot more nightlife and the like. But I think it'd be appropriate today, since it is the end of the week, right, the last trading day of the week, to sort of summarize what happened over the week on Wall Street. I should say over the last 2 weeks. Now, we know the main data point for this week was the CPI number. Okay, the inflation data was probably the most critical. Now, CPI is used by the Federal Reserve as a guide towards their monetary policy decision. And if we think back 2 weeks ago now, Fed Chairman Jerome Powell and the Fed presidents came together and decided at the conclusion of the FOMC meeting that they were going to raise interest rates yet again by 25 basis points. Now that brings the federal funds rate to a target range of about 5% to 5.25%. And after that CPI number, I think we are going to continue to get rate hikes in increments of 25 basis points. Now, if we go to CNBC.com, let me do this before we get started, CNBC.com/bonds, we could take a look at some of the action in the bond market today. If you take a look at the yield curve, I should say the main components of the yield curve that many people look at is the 10-year U.S. Treasury yield. It's yielding about 3.463%, and the 2-year Treasury yield is just nudging up on 4% at 3.991%. And then again, if you look at that 1-year Treasury yield, we are a hair under 5% at 4.791%. So the yield curve is still pretty inverted. If we take a quick peek at the 30-year fixed rate mortgage, according to CNBC, the average 30-year fixed rate is 6.55%. That's actually down from a recent high from March 3rd of 2023. This was before the Silicon Valley Bank collapse, when mortgage rates were at 7%. I think they're going higher. I think we are going to remain in an environment of higher for longer. And we'll talk about that tonight, because the last thing I wanted to say before we say hello to everybody in the chat is I want everybody to take a quick look back in history. Specifically, today's date, March 12th, 2021. Now, the S&P 500 on May 12th of 2021 closed at 4187. Okay? So 2 years ago today, the S&P 500 closed at 4187. Today, fast forward 2 years, the S&P 500 closed at 4124. So chances are, if you unfortunately slipped away into a coma 2 years ago and you woke up today, it's almost like nothing changed. The stock market has gone sideways for 2 years now, guys. We have been in this very volatile, choppy sort of trading range, and it's really been a stock picker's market. We'll talk about what that means and more. Is the bull market back? Are we going to make another low in the market? Stay tuned. We'll talk about it. Let's say hello to everybody in the chat, and let's get started off with the live stream. I see Sebastian is here. My good friend British Gray. I see Julia M. Mandy. Mike is here. Jafet Perez. Jay Einstein, welcome. Tracy, the investigator. Robin, Mike. Lemonade, Ortega. Eyeglass Lady is here. Long time no see. Hopefully you're well. Kanar Bar, Lemonade. Jimmy T says, good evening, Tom and everybody. Welcome. Yeah, Bree Graham said March. May. Teresa Diaz, Tom Barry, Smee Media, and Julia M says, hey, Tom. I'll be in Miami on Monday or Tuesday for the week. Very cool. I know that you actually just made it back to New York, so interesting that you're coming down here again. That's good news. That means you liked it. It means you enjoyed your stay. Now, there's another piece of economic news that came out today. Did anybody see the University of Michigan Consumer Sentiment Report that came out? It's the lowest reading in 6 months, which is kind of interesting because it seems as if consumers are actually pretty strong. Let me put on my backpack here. You know, yesterday when we were in downtown Miami and Brickell, everybody was out, the restaurants were packed. Sort of say the same thing when we were in New York. Everything seemed to be booming, a lot of nightlife, a lot of hospitality. SME Media is here. Good to see you, SME Media. I see British Grey, Gary Carpenter. So welcome to South Beach, everybody. It is a beautiful night. It was a beautiful day today. I think I told you guys yesterday, but I went to a golf event today, which was pretty good. I was a little bit nervous about it because I'm not really a good golfer, but I did okay. I didn't do so horrible that I embarrassed myself, but I didn't do so great either. It was sort of just like middle of the pack. I definitely got to work on my golf skills. So we're starting off the live stream in a little bit of a different location. Usually when we start off the live stream in South Beach, here's the Joe and the Juice right here. But we'll cross over to the Eden Fine Art Gallery. It's a very windy night too. You can see the palm trees blowing in the wind right here. But if you remember correctly from our New York City live streams, right behind the St. Patrick's Cathedral is an Eden Fine Art Gallery as well, also in Soho. When we were down in New York, you could see it says New York, Aspen, Miami, London, and Dubai. I don't know what MMTLP is, but check this out. Super unique art pieces. Look at that. Could you imagine having some of this stuff in your house? I think my favorite artist that is, I'm not sure if it's native to Miami, but it's very, very famous in Miami, is Alec Monopoly. Really interesting pieces. If you've ever been to Wynwood, there's a lot of his pieces around there as well. Really nice. This one is cool too. Look at that. Hey, Jimmy T says golf is the only sport you don't have to be good at to enjoy. That's true. Now, I was golfing with an old friend, an old client that's actually moving some of his business down here to Miami from New York. It seems like if you have a business in New York, it's almost like a prerequisite that you open up a satellite office down here. It seems like everybody is sort of spending some time in Miami, spending some time in New York. But I think the biggest overarching theme of today, everybody, is sort of talking about why we've been in this sideways market, right? If you look at May 12th of 2021, we are literally sitting at the same exact place, give or take a couple points, right? I think we're about a 50-point difference. So this market has made no material progress for 2 years. But if we do a little bit of post-analysis on this, it actually makes a lot of sense. Because if you remember back to our New York City live streams, this is actually a really nice, I think this is one of the Rolls-Royce trucks, right? SUVs. I think they may be a little bit new, right, to the Rolls-Royce lineup. I'm not too sure what they're called. Maybe it'll say what the name of it is on the back if we go around. But, you know, if you think about what moves the stock price, it's mainly two things. And this comes from Stanley Druckenmiller as well as Paul Tudor Jones, two of the most famous and most successful traders and investors of our lifetime. And the two things that move the market is number one, liquidity, and number two, earnings. And what do we notice about the last 2 years in relation to liquidity and earnings? Well, if you go all the way back to the great financial crisis, 2008, in order to get ourselves out of the financial crisis, we launched quantitative easing. So the Federal Reserve has been expanding their balance sheet by buying mortgage-backed securities and U.S. Treasuries. Here we have the Miami Fire Department. You'll see a lot of these Art Deco style buildings as we go through the night too. These are some of my favorite buildings here. Now I think South Beach has the largest concentration of Art Deco buildings in the entire United States. So we're gonna see a lot of that tonight. But anyway, as I was saying, you know, if you look at the lows of 2008, the reason why we've been in this huge stock market super cycle where essentially, you know, equity valuation since the lows until the COVID bubble popped, it's been on a one-way rocket ship higher. And that's because we've been living in a financial system that has ample liquidity, or you can, I guess, substitute that terminology for stimulus, right? Now this happens in two ways. If you think about the central bank, the Federal Reserve that we have here in the United States, with Fed Chair Jerome Powell, they've left interest rates artificially suppressed near zero. And this encourages businesses to take on risk, to borrow money, because money is essentially free. But what they're also doing is they're expanding the Fed balance sheet by purchasing mortgage-backed securities, as well as purchasing U.S. Treasuries, right? Providing money in the system, providing liquidity to the system, and you've seen equity valuations absolutely balloon. Now, we've gone sideways for about 2 years. And what is the main policy change that we could identify that probably could have caused that? Now, if you guessed the Federal Reserve, you would be absolutely correct. Because instead of going from quantitative easing, we've gone to quantitative tightening. The tightest monetary environment we've been in since the 80s. The Federal Reserve has raised interest rates to the tune of over 500 basis points now. And they are starting to let assets roll off their balance sheet. So liquidity in the financial system is being sucked out instead of injections of liquidity like we saw during the, you know, huge COVID stimulus. So it's a no wonder why equity valuations have been moving sideways over the past year, because we're seeing liquidity get sucked out of the financial system, and also we are going through a little bit of an earnings recession, right? We're seeing valuations compress. We're seeing profit margins and gross margins come under some severe pressure here at many of the large companies that make up the S&P 500. So in essence, the Federal Reserve is accomplishing what they want, right? They want the markets to cool down. They want to get inflation under control, but unfortunately that comes at a cost. That comes at a cost to corporate earnings, that comes at a cost to equity valuations and home valuations. So we're going to walk all the way down to Ocean Drive tonight. We'll take a look at some of the Art Deco buildings. Hey, Ras is here. Good to see you. Thank you so much. Joseph Hardaway says, what's up, Tom and Chad? Happy Friday. What's up, Joseph? Thanks for joining us. Sam M is here. Steph UH, good to see you. Thank you, Steph. Tom Barry says, Tom, hasn't the state of Florida changed the law so that OLD buildings can't be landmarked? I don't know. I really don't know. Are you referring to the older type of Art Deco buildings like these ones? Because a lot of times what happens, and you'll sort of see exactly what Tom is talking about here, some of the Art Deco buildings are in disrepair, right? And a lot of new developers are coming in, knocking them down, and building sort of newer style, luxurious buildings. and it sort of takes away from the character of all the Art Deco style here in South Beach. So I don't know if they've passed additional laws to maybe prevent that. I'm not too sure, actually. I don't know. I'll try to stop at as many Art Deco style buildings as I can to show you. If you look across the street, you'll see some very unique ones right here. Now, the majority of these are pretty much like hotels, motels, also bars and grills. Really cool stuff. Photos from around New York, good to see you. UniJ23, thank you so much for joining us tonight, and happy Friday to you. I wish you a very peaceful weekend. British Gray from Tampa, Florida, on the other coast. Good to see you. Now, these are my favorite type of palm trees, these huge ones that open up like that. I'm not sure what they're called. This building is called the Social Club. Really nice architecture here as well. Julia M says, Tom, I love the Catalina. I've stayed there several times. You know, I'm trying to think if I've ever stayed at a hotel in South Beach. I think I may have when I was younger, but usually I stay further north in a little town called Little Buenos Aires, which stretches from 72nd Street, I believe, to 90th Street. Here's some more across the street. Jafet Perez is here, welcome. Charles Hong says, Tom, what is your view on Dave Ramsey? Dave Ramsey is the, I think he has one of the leading talk shows in America, right? For finance, I believe. I listen to his stuff often, not so much anymore. Now, what I'll say about Dave Ramsey is this. He's 100% right. Pretty much all the time, but, oh, hold on, look at this. Guys, does anybody remember yesterday when we were in Brickell, we were looking at the SLS Lux Towers. Now, I guess this is the SLS Lux Hotel in South Beach, which it sort of doesn't even look like an SLS building, because all of the ones that you see in Brickell are these crazy, ultra luxury, all glass buildings. So it kind of doesn't even look like an SLS property, but it is. It looks nice. Definitely fits the vibe of South Beach. So anyway, back to Dave Ramsey. If you listen to Dave Ramsey's advice, you will always be comfortable and you will always be fine, essentially. You will never be in financial ruin. If you stay away from debt, if you save all your money to purchase all your properties in cash, you're going to live a really nice life and you're going to live a stress-free life. But if you want to try to really go for it and be, and build like a substantial business and, not, I'm trying to word this in a way where I guess it's politically correct, but I guess I don't care about being politically correct. If you really want to go for it, you can't really listen to Dave Ramsey's advice. Because debt is very useful, but debt can also be very explosive if you're incompetent in the way you use it, right? So generally speaking, Dave Ramsey's like, stay away from all debt. All debt is horrible, which I disagree with. The problem is the vast majority of people don't know how to utilize it, and they take on ridiculous risk and they're not very financially savvy. So for the average person, yeah, it's probably best, to not take out excessive, risk and just work, the same job forever until you retire. That's fine. But if you want to sort of have your own business, you kind of got to take big risks out of the parameters in which Dave Ramsey says. So I think he's very good to listen to if you want to build a broad baseline foundation of financial literacy. I think it's fantastic. It's perfect. But if you want to get a little bit more advanced and really go for it, you're going to need to do different things. It's kind of hard to scale to 100 million to 200 million to $1 billion, you know, if you're not using any leverage. It's just a little bit, it's difficult, right? You know, Jeff Bezos used leverage. Citadel, Ken Griffin used a ton of leverage. His whole market making business. So that's what I would say. But overall, I think Dave Ramsey's great. I think Dave Ramsey's really good for the vast majority of Americans for building, you know, financial literacy. I think it's good. All right, guys, this is actually Lincoln Road. I guess this is one of the most notable spots in South Beach, on the corner of Collins Avenue and Lincoln Road. Really nice. Mel, this is Tom. As somebody who once had a credit score of 500, things were really difficult. This is Meld. Well, I'm glad things are better now. Meld says, I've never understood how Dave Ramsey expects people to get through life without a credit score or being concerned about one's score. Yeah, and so that's another thing, right? He's like, you know, you can go to some lenders that'll manually underwrite the deal that you can get a mortgage without a credit score. Again, you know, he's for never get a credit card ever, never use any debt ever. But I'll tell you guys a quick story. I used to listen to all of that advice, and it was very good advice, right? And that actually screwed me royally when I went to purchase my investment property here, okay? I had to pay more for the debt, right? So I got a higher interest rate because I didn't have a credit score, right? And I was very well capitalized. I could have bought the place in cash if I wanted to. But in the financial system in which we live, unfortunately, these financial institutions, these banks, want to see some sort of credit history. Even if that means you've opened up a credit card and, you know, you're spending $100 a month on it and you're paying it off in full. If you want to participate in the financial system, particularly if you're going to get in the real estate business, you have to have a credit score, okay? I know Dave Ramsey will tell you don't have to. Technically, you know, if you want to go to these like obscure places that'll manually underwrite the deal on a single family home, okay, but it's better, in my opinion, and I can't give financial advice, that you should probably open up a small credit card as soon as possible and just put $50 a month on it for gas and just pay it off. You're not blowing, you know, thousands of dollars and racking up your credit card debt, right? But you do need to build a credit score, especially if you're going to be in the finance business or the real estate business, because those businesses are all predicated on debt. And the underwriters who are underwriting these deals, they don't care if you have $1 million in the bank. They're like, dude, you have no credit history. So you're going to be paying more for the debt you take on if you don't have a credit history. So that would be sort of my take. So it's important. It's important to build a credit score as early as possible, in my view. I don't know, anybody else have any thoughts on that? Hey, Gigi NYC is here. Says, good evening, everybody. Welcome. Ken Brockton says, Ramsey's one-size-fits-all approach assumes people can handle credit cards. People with discipline can enjoy 1K of tax-free money a year. Yeah, and again, you know, Ken, you make a good point. But if you look at the data, right? So this is sort of what Dave Ramsey will say. Dave Ramsey will say, if you look at the data, the vast majority of Americans abuse credit cards. They hold the balance on the credit card, and then they get banged with the interest, which is true, right? So for the vast majority of people, his advice is spot on, and it should be followed, right? Oh, we got the Miami Fire Rescue. Wow, this is a really nice Art Deco building too, with amazing landscaping, unbelievable landscaping. Hey, Billy Johnson is here, welcome. Man, these palm trees are gorgeous here in South Beach. But yeah, if you look at the data, the vast majority of Americans abuse the credit cards, they hold balances. And the thing is, the worst kind of debt to have is consumer debt, right? Because if you look at the interest rates on some of these credit cards, they could be like 15 to 20%. And I know that sounds crazy, but it's true. So you never really want to carry a balance like that. Because, I mean, just do the math. You know, 15% compounds out at a ridiculous rate. So if you're going to use those type of instruments, I should say, you really got to pay it off in full. Hey, Just the Guy says love staying there. They have a great pool. Oh wow, so you've stayed there before. Very nice. I love the grand entrance on it too. So it's right next to the Royal Palm. Look at the entrance here. I love this huge roundabout driveway. You have all the taxi cabs pulling up. It's really nice. Hey, Hemi Power is here. What's up? Good to see you, Hemi Power. Username Schmoosernames is Ramsey thinks it's bad to have a credit card even if you pay it off each month. He thinks you spend more regardless than the cash in hand. Yeah, exactly. And you know, the thing is this. There's different types of people, right? There's people that are extremely entrepreneurial. The only way I could explain it like this. People put their priorities in different places. And in my view, if you are a high income earner, right, and you are a very ambitious person, you should put more of your focus and more of your weighting on how to grow the top line, if that makes sense, right? And for me personally, right, Dave Ramsey is all about, you know, how to live like a hermit crab and, you know, never spend money on a coffee or something like that. And that's fine advice. But again, if you want to, you know, do huge deals, right, start your own business, or maybe you're working in corporate America, you know, in investment banking or in consulting, or you're a lawyer or something like that, I think you have a much better ROI, much better return on your investment by focusing on how to grow the top line, which means if you think about it, there's only so much costs you could cut, right? It's not exponential. So you want to focus on the exponential side of the equation, right? I mean, it only makes sense. I mean, I'm no mathematician, but you could do everything you possibly could and you could reduce your expenses to zero, but you can't have negative expenses. But you, in theory, you could have unlimited income. So as long as you're not, you know, blowing ridiculous amounts of money on stupid stuff, you could spend pretty much, you know, freely, as long as you're responsible and that spending is going towards making you more money, growing your network, building those relationships, instead of just focusing solely on the little teeny amount you have. That's sort of how I think about it. So look, as you progress, I think listening to Dave Ramsey is 100% appropriate as you get started. But as you go through life, as you get these really lucrative, high-paying jobs, or maybe you're starting your own business, you'll start to find that if you want to make the big money, you kind of have to be willing to spend it. Not saying spend it frivolously, but maybe you gotta pay your employees a little bit more. If you want a really good salesperson, maybe you gotta pay them a higher base salary, something like that. So I don't know. I would focus on growing the top line, focus on building skills, and don't be so afraid of, spending the money. And I learned that too, because I used to be extreme hermit crab, living in, an environment of scarcity. But once you start to, have a good job and build out a network, you sort of see. It's hard to explain, but your expenses naturally go up, right? All right, guys, this is Espanola Way. I think we'll take a quick walk through here first, and then we'll head down to South Beach. Well, I should say Ocean Drive, because technically this is already South Beach. I always love looking at this pizza place here. Love the little Vespa outside. I actually parked my scooter not too far away. Hey, Penelope, what's up? Penelope's joining us from the beautiful, what's it called? Tennessee. Rich Child Nines, as we have been conditioned to think living with debt, you can live debt-free and have a great lifestyle. Yeah, for sure. But again, to a degree, like if you're running and operating a business, you're gonna have debt. Like every business on earth has debt, right? But I agree, 100%. Mimi says, I've noticed Dave Ramsey keeps recommending mutual funds. Why not ETFs? I don't know. I mean, you know, you also got to be careful about mutual funds too, because a lot of mutual funds, we've talked about this before at length, a lot of them still charge really egregious fees, right? So Wall Street makes the vast majority of their money off of fee income. So the statistic is also true that the majority of mutual funds on Wall Street very rarely ever beat the broader market. And when I mean the broader market, I'm talking about the S&P 500 or the benchmark. So if you're paying 200 basis points in fees to a mutual fund manager that's not even going to beat the market, you know, I think that's something to consider. You know, that's why passive investing has been so popular as of late, because many people just dollar cost average into the broader benchmark and pay, you know, a fraction of, you know, 100 basis points, like 25 basis points in fees they pay. Guys, this is Washington Avenue, but this is also Espanola Way. I'm trying to think of the last time we've been here. I think it's been well over 2 months. Hey, Zozo Bob, what's up? Lila is here, says, hey, Tom and everybody. Good to see you. Photos from around New York, says, Tom, how did the golf tournament go? It went all right. It was a lot of fun. I got to catch up with some old clients. I didn't golf so well, but I didn't golf so egregiously that it was embarrassing. But I will say this, I definitely do need to go practice golf before I go play with clients again. Like that is a must for me. I really got to focus on that. So maybe I'll go to like the driving range, you know, once a week, hopefully something like that. Hey, Rachel Abreu says Havana 1957 has amazing food. I've been there once. It's actually really good. I'm trying to figure out which other restaurant I've been to. I think it's this Italian one over here that's always packed. This one is really good. I think the only 2 restaurants I've ever been to on Espanola Way is that Cuban restaurant you were just talking about, and then this one too. Now, speaking of hospitality, last week's non-farm payrolls, or last week's jobs number, the vast majority of the jobs created were in healthcare and hospitality, which, just for a little bit of anecdotal data here, it kind of makes sense. I mean, almost every single night that we're out in Miami or we're out in New York, it seems like the restaurants and the bars and the hotels are pretty full, are pretty packed. Now, we heard from Hyatt Corporation, which is a luxurious hotel brand. Hyatt posted, I think, record net income, but also Marriott, ticker symbol MAR, reported earnings, I think yesterday. They reported a good quarter and they actually decided to raise their dividend, so raise their distribution to shareholders. So for all of the recession talk, it seems as if consumers are still holding up pretty well. People are going out to eat, people are traveling. Now, for those of you in the chat, wherever you are tuning in to Walks in Wall Street from, does it sort of look the same in the downtown area where you live? You know, maybe you live in San Francisco, maybe you live in San Diego, maybe you live in Austin, Texas. Are restaurants packed near you? Hey, ATC is here. What's up, ATC? Rachel says, Tom, have you checked out Topgolf? You definitely should check it out. I've been there once on like a corporate event. I haven't really been since, to be honest. Joel PM says, but are people spending or just ordering appetizers and drinking water? I think that's a little, I don't think so. Maybe, we'll see. Let's see how many waters are on the table. This place seems new for some reason. Hey, Hawaii is here. Good to see you. Thanks, Hawaii. British Grace is no, not down Tampa, but Harbor City is. Jenny Trickets is 185% markup on booze. I could imagine. Hey, Robert Parker says, I don't have to tell you about life in New York, do I? Yeah, I know. Yeah, New York is doing pretty well in terms of hospitality too, that's for sure. Now, I already told you guys this story, but last week, New York City was really busy with the Met Gala, with the brand new grand opening of Tiffany Jewelry Store, and the Park Hyatt was totally sold out. So you were completely sold out at a hotel where the entry-level price is $1,200. Now this hotel is called the Casa Victoria. Really nice decorations on it too. I'm not sure if these flowers are real, but they have a really cool bar set up inside. It looks really nice. Hey, Goshi88 says, Tom, restaurants are still getting nice amounts of business, but people are spending less than previous years. I'm saying that from a perspective of a person who still works in the industry. Wow. So maybe PM was right. So what you're saying is more people are going out to eat, traveling. However, they're spending less money in terms of average ticket price. That's really interesting. I would have never thought that. So people are opting to go out more, but when they do go out, they spend less. Interesting. Thank you so much for that. Hey, Plains and Palm Trees is here. Thank you so much for your very kind donation for your $2.79 CAD. Happy Friday to you. Hopefully you had a successful week. Thanks for joining us here at Walks on Wall Street. Bill says, this area seems like a lot of new development. I don't know. I mean, this area has been here for quite some time. Ever since I've been going to South Beach, this area has been here. I think it's just they keep everything very nice and it's extremely, extremely clean here. Now, one of the main things I've noticed when I moved to Miami, Florida specifically, is how clean they keep the city. I honestly don't know how they do it, particularly in downtown Miami and Brickell. The streets are clean. Very rarely do you see garbage on the ground. It's really nice. Hey, G Long Walks is here. Says, hey Tom, happy Friday to you. Good to see you. Mike C says, I can't get over paying that much for a hotel room when you were asleep the whole time. It's crazy, man, but people do it. People do it. I mean, there's demand for it. Now, to be honest, the Park Hyatt is an unbelievable place. Maybe one of these days I'll be able to give you guys a tour of it. But it's honestly one of the best hotels in New York City, in my view, by far. They have a really nice gym. They have a indoor saltwater pool. It's a really amazing place. And the restaurant's pretty good too. The restaurant is called The Living Room. Brendan O'Brien says, who is correct, Druckenmiller / Buffett / bond market charts or both? Well, I don't know. And so we'll talk about that, because at the very beginning of the live stream, I said, if you look at the S&P 500's closing price on May 12th of 2021, so essentially today, 2 years ago, right? We closed about 80 points off of where we are. We could just, for argument's sake, we could call it, the market's been flat for about a year now. which actually kind of makes sense. Now, Stanley Druckenmiller's point, for those of you who don't know, Stan Druckenmiller, one of the greatest investors really of all time. Now, Stan Druckenmiller got his start trading under George Soros. And Stan Druckenmiller's position right now is he is very bearish on the US dollar. I think he has one of the largest short positions on the dollar ever. Now, I'll sort of give you my take. Here's what I think. I think you're seeing a normal market cycle play out. So there's a lot of people calling for doom and gloom. There's a lot of people saying that the US dollar is going to be dethroned as the world's reserve currency. I don't believe that. I don't buy that. Yes, the market has been sideways for 2 years, but I think it's been much needed. The market could go sideways for another 2 years. And that is due to the two things that we talk about all the time on the live stream, right? What drives equity valuations? What drives stock market valuations? And that is liquidity and that is earnings. And ever since the Federal Reserve started to raise interest rates, they've been sucking liquidity out of the market, and that has resulted in a little bit of an earnings contraction, an earnings recession, if you will. And that's why during the COVID pandemic, stocks really took off like crazy because there was so much liquidity in the market, right? The Federal Reserve went on a bond buying binge. They were buying trillions of dollars worth of assets. They were purchasing mortgage-backed securities. They were purchasing U.S. Treasuries, expanding the Federal Reserve's balance sheet, all while they were leaving interest rates near zero, right? And that spurred a massive, I would say, turbocharged economic boom and inflation, not only in goods and services, but in asset prices. But over the last 2 years, the Federal Reserve went from extreme quantitative easing to the most extreme quantitative tightening that we've ever had since the 1980s. So with QE, that provides liquidity to the market environment. With quantitative tightening, that sucks liquidity out of the financial system. So if we are in an environment, and it's not only the Federal Reserve, by the way, right? This is global central banks. This is the ECB. This is the Bank of England, which just raised interest rates. So central banks around the world are raising rates. They're letting their balance sheets run off. And that has caused the stock market to take a little bit of a pause, which is exactly what the goal was at the Federal Reserve in the first place. Now, I think the next thing to take a little bit of a pause, which is in a recession, I would argue right now, is the real estate market. Right? You've seen transaction volumes significantly decline and dry up. Again, if you think about liquidity, real estate is significantly less liquid, or you could say illiquid, as it relates to the stock market, right? Stocks are very, very liquid. You could log on to your Charles Schwab account and liquidate $1 million worth of stock, before you even, put on your suit in the morning, right? But you can't just automatically liquidate $1 million worth of real estate. It's going to take you a couple months. So in the long term, I would say I'm more bullish on America than I've actually ever been. And I'll sort of explain why. But Stanley Druckenmiller, Paul Tudor Jones, Warren Buffett, they seem to be very bearish, right? And they may be right in the short term, but I think in the long term, they'll actually be wrong. I don't know, we'll see. Hey, Jenny Trickett says, okay, needed that question answered today, QE and QT. Thanks, Tom. Appreciate it. Now, what do you guys think? Do you think that the US dollar is going to lose its position as the world's reserve currency? Do you think that GDP is going to continue to contract in the United States? Because honestly, 70% of the move in the S&P, if GDP is going to expand, there's about a 70% probability that the stock market is going to go up, right? And that's why so many economists and analysts on Wall Street look at all these leading economic indicators. They look at the Institute for Supply Management PMI numbers, right? They look at all of these different metrics to try to predict GDP growth, because there's about a 70% correlation. If GDP is expanding, well, that means 70% of the time, 6 months later, the stock market's going to go up, right? Brendan O'Brien says Druckenmiller, his theory is that there will be a black swan and then massive quantitative easing. Well, that could potentially be true, because Brendan O'Brien, maybe, I think your first point, the bond market is signaling rate cuts in 2024. In late 2023. Real quick, guys, check this out. This is the Betsy Orb. This is a very famous structure here in South Beach. Now, I think you could actually walk in between here. You could walk in between these buildings. I've never been in it, though. Really interesting. And then we're going to make a right on Ocean Drive, which has amazing Art Deco style buildings. But here's the interesting thing, right? So your question was, who is right? Is the bond market right? Is the Federal Reserve right? Because the Fed chair, Jerome Powell, said specifically that cuts are totally off the table in 2023. He said that specifically. He said that multiple times. Not only did he say that last week at the conclusion of the FOMC meeting, he said that at the previous FOMC meeting. He says rate cuts this year are totally off the table. It's not happening. However, if you look at the futures market, the bond market is actually pricing in rate cuts this year. So what does that mean, right? Usually the market is never wrong. So maybe the market is pricing in these rate cuts not because they don't believe, or not because the market doesn't believe the Fed chair, but maybe the market thinks that there's going to be some sort of black swan event that's going to force the Federal Reserve to pivot and start to cut rates and provide quantitative easing. Now, I don't know what that may be. Anybody have an idea? I don't know. Emmanuel says, hey, Tom, I saw you in Martin Shkreli's stream the other day talking about margin of safety. Yeah, it's, yeah, I sometimes I'll pop in there to say hello. But yeah, Martin Shkreli is a very controversial guy. But at the end of the day, I think, you know, he's really misunderstood, I think, by a lot of people. Sometimes to his own fault, right? I think he has really bad PR, and I think he'll be the first to admit that. But yeah, I mean, Martin recommended way back in the day. I read that book, Margin of Safety by Seth Klarman. Now, many people recommend that book, but very, very few people read that book, Margin of Safety. Now, you could probably get some PDFs online for free, but I think if you want to own an original copy of Margin of Safety, I think the book is like $5,000. But yeah, not a lot of people know this, but Martin Shkreli actually used to work for Jim Cramer's hedge fund back in the day when he was in high school. He had an internship there. Martin then went on to go into the pharmaceutical industry. I think he may be working on another startup in the pharma business. Hey, Brendan O'Brien says he states a position which could be reasonable but then makes it seem totally outrageous, or at least used to. Hey, Martin says good old Ocean Drive. Gina Thomas says, Tom, you missed, oh, I missed the super chat. I apologize for that. Let me see. Hey, Gina Thomas, thank you so much. Says, I am back. Hey, Tom, good to see you, Gina. Thanks for joining us. We're taking a walk on Ocean Drive tonight, so thank you so much for your very generous donation. I appreciate it, and I hope you have a great weekend. Bill says, I cannot get Art Deco to click with me. No idea why. I kind of like these buildings. I think that it's very unique to anything else in the country. Love Art Deco. Nina says, Tom, been enjoying the beautiful weather in Miami, Florida. Fabulous. Yeah, today was amazing, especially on the golf course. Unbelievable weather. I think it was 86 degrees. 86 degrees. Justin S. says, Tom, how do you see AI impacting Wall Street with the way that it will be able to interpret data? It could cause big swings and impact buyers and sellers. Maybe. I think, in my opinion, I see AI having a really big impact in a lot of back office roles. So a lot of accounting, a lot of audit, compliance. I think AI is going to have a really big impact there and be very helpful. Now, I would actually argue that algorithmic trading and quantitative trading has actually made the markets a lot more liquid and actually reduced volatility on Wall Street, in my opinion. And one of the ways you could actually backtest that is by looking at intraday volatility, or the average intraday volatility before algorithmic trading and before quantitatives on Wall Street, and then compare the average daily true range to that of right now. And what you'll find is that now that we have all of these, essentially the quants run the market, right? The big market makers like the Citadels, the Two Sigmas, the jump tradings. Intraday volatility is actually substantially collapsed, which is actually good for true price discovery, in my view. So I don't personally buy the narrative that, you know, more AI in the market is going to make markets less free and fair, in my opinion. All right, let me catch up on some more of the chats. This is the Marriott Vacation Club, or Pulse. Really beautiful building here. Joel PM says AI Black Swan will need universal basic income to address joblessness. Now, I think you guys would be surprised, but I'm actually not 100% against a universal basic income. I'm actually not at all. I actually think we may need it. Now, I've sort of explained my position on it. I would say my position is very similar to that of, I think, former presidential candidate Andrew Yang. Now, it's not just give random people money, but it's sort of to help people assimilate back into society where their jobs could essentially be totally wiped away, right? So I think if you read a lot of work from politicians / entrepreneurs, or I should say entrepreneurs turned politicians, you'll notice that they are very forward thinking, right? Traditional politicians are very reactionary because 9 times out of 10 they have very little experience in the private sector, building a business or actually doing anything. So I actually think that this is a good idea to potentially look at look at a subsegment of the United States, or people in the United States that are working jobs that are very highly prone to displacement due to AI, due to autonomous driving, things like that, and provide those people with some sort of financial help to be used towards retooling their skills for a new economy, right? Maybe that's sending them back to a school to learn a different trade, right? If their job is going to be totally displaced and they're going to be out of work, well, we just don't want these people suffering. We want to try to front run that activity and invest in our citizens so they could retool and reskill for a modern economy. So in that instance, I'm actually not totally opposed to it. I think that'd actually be the right thing to do. Yeah, I'm actually not opposed to it at all. Hey, Travel Size is here. Good to see you. Now, what I'm against is just giving random people money like we did during COVID, just literally spewing money all over the place. I think it has to be targeted and with a purpose, right? So if you have, let's just use truck drivers for an example. I'm not saying they're going to be displaced, but if you really follow the trend of autonomous driving, AI, 5G networks, I think over the next 15 years, you know, autonomous driving is going to be really good. So I think there could be some job loss there. I would be in support of some sort of a financial stipend or financial dividend to provide these people to use on retooling and reskilling so we could assimilate them back into a different job, right? You can't just leave these people hanging because it's at such a mass scale, the disruption. This is the Cordoza Hotel, really nice. Mike sees, it sounds like you may want to take the universal out of universal basic income. Yeah, maybe like a targeted income. Because look, but that'll never happen in my opinion, because Republicans as well as Democrats are very hard-headed. And what I've noticed now in the political environment, and I really hate talking politics, but it's almost as if you have to be in this little box. You have to be in a container. It's either you have to be a full-blood Republican or you have to be a full-fledged leftist left wing. And if you're anywhere in the middle, you're just totally gaslit and demonized. And I think it's very dangerous for our country, because a lot of the people that sort of sit in the middle that tend to, you know, come up with these creative solutions, you know, they're blamed as to why this president got elected or that president got elected, because you're not picking a side. And I think that's ridiculous in my eyes. Guys, this is my favorite Art Deco style building in Miami. This is the Carlisle. Man, it looks so beautiful. And look at the clouds in the background too. It is a gorgeous night out here in Miami. And it's actually not too hot either. It's not even humid out. I know a lot of you in the chat hate humidity. It's not humid. It's actually really nice out. Hey, Brain XTC says eventually AI will replace heart surgeons and brain surgeons. I don't know. I don't really have any medical background, maybe. I think we'll be surprised. I think we'll be surprised with the disruption for sure. Nina says, honestly, my feel on universal income, groom peoples to lose interest in working again. Maybe, but I think that's why it needs to be sort of targeted, perhaps. So again, when I say universal basic income, I'm not just saying litter and shower everybody with money. You know, I would create a department in the government to run the analysis and say, okay, which sectors in the US economy are at the highest risk for job displacement due to all of these new technologies? Because what a lot of politicians do, which is actually the complete wrong choice to do, is stifle the innovation, right? They're saying, oh my gosh, you know, AI, autonomous driving is going to get rid of all of these jobs, so we have to ban it. No, that's not what you should do. You should let innovation continue to churn on, but you should invest in your citizens, train and retool them for the jobs that are going to be created by all of this new technology, right? So that's sort of, they have it backwards, right? You can't just live in the Stone Ages. You have to let innovation progress, because if you don't, all of that innovation is going to go to another country, which is, you know, the only area that I'm seeing where a lot of that innovation is going to other countries is unfortunately in the blockchain and cryptocurrency space. A lot of that is going to Malta. A lot of that is going to the UAE because the SEC and Gary Gensler, I mean, we've been talking about this for 2 years now. They have not provided any sort of regulatory clarity on cryptocurrencies or blockchain technology at all, like zero. And that sort of puts a lot of entrepreneurs in limbo, right? They don't know what to do. So unfortunately, I think Brian Armstrong, the CEO of Coinbase, I think he actually just took a big trip to the UAE, meeting with a lot of government officials over there. And unfortunately, jobs and innovation is going to go overseas. So I'm so surprised that this thing is vacant. Look at this. It's called, what does it say? The Tides. It's totally vacant. Maybe they're gonna knock it down and build some sort of, probably like luxury condominiums. That seems like that's all the developers do. Here's a view looking north on Ocean Drive. Charles D says, Tom, you will never displace truckers. For one, lawyers will never let it happen. The cost would be too much. Maybe, maybe. Sloan says, hey Tom, are there a number of public transit options from South Beach to Brickell? There's not a lot, honestly. There's not a lot. But the good news is, I should say supposedly, because you never know how long that's going to take. Supposedly, they're supposed to expand the Metro Mover to go from downtown Miami all the way to South Beach. But for some reason, a lot of people are fighting that and petitioning against the expansion of the Metro Mover, which I think is just totally stupid. The only way to get to downtown Miami from South Beach on public transit, I think, is if you take the bus. I think you got to take the S bus, and every time I try to take the S bus from downtown Miami to South Beach, during peak hours, there's no seats on the bus and there's really even no standing room. So just use that as a forewarning. If you're moving down here to Miami, Florida, and you're going to be commuting from South Beach all the way to downtown Miami or Brickell, I'd probably get a little bit of a scooter. There's a lot of scooters, a lot of Vespas, tons of parking, and you could probably get to downtown Miami or Brickell less than 15 minutes, depending on traffic, maybe even a little bit faster than that, honestly. Yeah, but unfortunately, you gotta take the bus. Now, the bus isn't too bad, but, you know. Hey, Abdullah, good to see you. Welcome, my friend. Now, I think Warren Buffett, at the Berkshire Hathaway meeting that happened over the past weekend, he said something along the lines of, the American dynasty, I think, is coming to a close. Like the great bull market in America is coming to a close. I actually kind of disagree with that. And if I would say this, the world has a very big problem right now. And that has to do with declining birth rates. Because generally speaking, if you want an economy to grow, you have to have a growing and stable population. And you have to have essentially a replenishment of the people. And in some Asian countries like Japan and Korea, they have, not only do they have aging populations, but they have declining populations in and of itself. That's why I've been so bullish on India. But I want to direct everybody to the front page of the Wall Street Journal today. Now, the front cover, I should say the cover story of the Wall Street Journal today was such a big eye-opener, in my opinion. And I think it's so important for everybody to read that story and look into it. I actually have it in my hand here. Now check this out. If the wind cooperates, let's see if the wind will cooperate. Now it says, migrants throng U.S. border as pandemic era rule ends. And the picture is of migrants crossing the Rio Grande trying to get to the United States. And if you notice, it's a lot of women and children trying to come across to the United States. And it's a really powerful photo. It's almost so powerful that you don't even have to read the article. And the point of that is this. You don't see people, risking their lives to, with their young children to get into Russia, right? To get into some countries in Eastern Europe. It's only happening in the United States. And not to get political, I know there's a big crisis at the border. I know we have to fix our immigration system, but you should actually take that as good news. Because the American values, no matter what Fox News or no matter what CNN wants to tell you, the American values of, if you want to come here, it doesn't matter what country you're from, it doesn't matter what your religious beliefs are, it doesn't matter what your race is, it doesn't matter what your sexuality is. If you come to the United States and you work hard and you educate yourself, we have individualized property rights here. We have individualized freedoms here. We will allow you to enrich yourself and enrich your family and get rich. You cannot say that in pretty much every other country around the world. So all of the innovation is going to happen in the United States of America. We are a brain drain for the entire world. All of the smartest people want to go to the educational institutions in America. Okay, people want to buy homes and raise families in the United States of America. And I believe, and where I'm betting my money, is that that is going to continue in perpetuity forever. Okay? All of these people that are trying to come here, those are our future police officers, those are our future teachers, those are our future doctors, lawyers, software engineers, military service members. And the stream of people that want to come to the United States for a better life is infinite. It's infinite. So when Warren Buffett and all these other people, which I respect, and these people are much more successful by light years than me, you know, say that, you know, the American sort of dynasty is gone and, you know, the best days are behind us. I mean, I think that these people are on such the wrong side of the trade, they couldn't be more wrong. If I had to bet, right, and sort of going back to what Peter Lynch always said, right? So Peter Lynch is the former mutual fund manager at the Fidelity Magellan Fund. And he said that corporate profits in America, on average, go up about 8% a year. So if corporate profits in America are going up at 8% a year, well, the market should double in 15 to 20 years, right? Now, you're going to have some years where the market goes down. You're going to have some years where you go into an earnings recession. You have margin compression, sort of like the time that we're going through right now. But over the long term, corporate profits go up. There's new innovative businesses, there's new innovative technologies that always come out, and that's never going to stop, right? We just had a really good conversation in the chat about artificial intelligence, right? We were talking about ChatGPT, all of these different technologies, and people are so fearful of them, but they are going to create so much opportunity, so much wealth, so much, I mean, I can't even describe it. It's just going to be such a net positive to society. And we are so lucky to live in the United States of America because all of that innovation happens here. Okay, I went to college in New York City. There was a ton of international students that I went to college with, and every single one of them, after graduation, they wanted to get a job here. They wanted to start a business here. They didn't want to go back. Right? They didn't want to go back to their country. They wanted to get the visa to be here. So I think it's a big positive. So when you see those articles and you see all of these people risking their lives, right? Now you could, argue the politics of the border crisis is horrible, which it is. Our immigration system sucks. But the point I'm trying to make is that in a world where everybody is worried about population decline, about GDP contraction, the United States is a magnet for talented people. It's a magnet for opportunity. And so long as that, I should say, structure stays in place, I think the United States is going to be just fine. And I think the US, Canada, and Mexico are positioned probably better than any other country in the entire world to benefit over the next 20 years. I don't know, any thoughts there? I know that was sort of a big rant, but I think we need to keep things in perspective. This is the Breakwater, which is another really cool Art Deco style building right here in South Beach. Hey, layman says depend on how it's used. You are solid on the positivity, a lot of negatives that will destroy what it means to be human. Maybe. Hey, Daryl's here from Chicago. What's up, Daryl? Good to see you. Thank you for joining us. Charles D says the nuclear family structure in the U.S. is trash. It has been on a decline for decades, Charles. Spencer says this is such fun. I want to go there. Please come. Please come. Bill says dead on, Tom. Mimi says positivity is good but cannot disregard the unforeseen risks. Yeah, I mean, I tend to be an optimist. I tend to be a positive person. But that's like one of the most important things, guys, for GDP growth is innovation and population growth. And it's true that millennials and Gen Z are not having children at the rate that, you know, boomers and our parents were. But we are going to more than make up for that with immigration. Now, there needs to be a lot of things on the political side that need to change. Right, we need to be letting a lot more people in here the legal way through H-1B visas and the like. But the point I'm trying to make is when you see these, you know, photos on the internet, when you see these videos on the news of thousands and thousands and thousands of migrants, okay, at our southern border. Okay, politics aside, these people are coming here for a reason. They're not choosing to go to Europe. They're not choosing to go to, you know, other countries. They're not choosing to go to China, okay? People don't, you know, paddle in little rafts to try to go to China or Mexico or Russia, right? They're coming to the United States for a reason. There's a reason why people want to come here. And I think it's because of our Constitution, right? Greatest country on earth, the opportunity to be successful, individual property rights, individual freedoms. You can't say that in a lot of countries. Line Sync, good to see you. Thank you for joining us. These palm trees are really beautiful here. Nina says USA is in deep, serious financial crisis. Can't pay the interest owed. Who's going to pay for support? Yeah, I mean, there's definitely a lot of problems, right? And I think that's a good point to discuss, because we are running up against a huge crisis that is our debt ceiling. We've reached our debt limit. But I think we need to keep it in perspective, right? And when we talk about global macro, you know, and I know a ton of global macro guys, right? Like Dan Tapiero, great guy. Speaking of Stanley Druckenmiller, Dan Tapiero actually got his start under Stanley Druckenmiller. But if you focus too much on global macro, there's always a crisis, guys. There's always going to be something to worry about. I can promise you that. I mean, think about, you know, back to World War II, right? When Hitler was trying to take over the entire world. Like, that was a scary time. We got through that, right? Think about the Cold War. That was a scary time. We got through that. Think about 9/11. That was a scary time. We got through that. Think about COVID-19 that killed millions of people. We were locked down in our homes, right? That was a scary time. We got through that. So, you know, there's always going to be some crisis to worry about, always. There's never going to be a perfect time. There's never going to be a perfect opportunity. And that's what creates the opportunity for alpha, or to generate alpha in the market, right? So you watch some of these people, especially on YouTube, who have huge audiences, right? You know, millions and millions of subscribers, and every video is the exact same. It's these generic fear porn arguments that are just like catering to a very basic audience that has very, very minimal financial wherewithal, right? I mean, it's just like, you know, not to, but that's what drives views. That's what drives clicks. Okay, why do you think people get so upset when they watch CNN? Why do you think people get so upset when you watch Fox News? You know, it's almost as if you watch a clip of a cable news channel sort of try to moderate your feelings throughout that clip, because they pull the most outlandish stories and just gaslight you the whole time. So it drives that revenue, it drives that advertising revenue, it drives the fear, right? Fear sells. So I'm not saying just be a blind optimist and be an idiot, but if you look at the bigger picture, right? And if you look back throughout history, especially in US history, we always find a solution, right? Now, you may have temporary recessions, you may have temporary downturns in the economy, you may even have depressions, right? But these are all economic cycles that everybody goes through. And unfortunately, what happens, it's a really cool car over there. I think that's a original Model T. Now, unfortunately, what happens is during the times of recession and economic depression, that's when people check out. That's when people tune out. That's really when you're supposed to be doubling down on building your network, building your skills, educating yourself, right? Not hiding under the covers and, going to your bunker and eating, canned beans or baked beans, right? That's what a lot of these people want you to do, but you're gonna miss all the opportunity, I promise you. So anytime there's recessions, anytime there's things that are scary on the TV, debt crises, immigration crises, and everybody tells you to go out and hide in the woods and get out of cities, I will guarantee you on this live stream, mark my words, you will miss every opportunity of the next 20 years. You'll totally miss it. Everybody is going to get rich. Everybody will become successful. They'll build businesses. They'll grow the economy except you. That is a guarantee if you do not participate. That's just a guarantee. So during this time, I would be doubling down on building your skills, tripling down on building your skills, okay? Focusing on doing as good of a job as you can, right? If you're employed, if you have, a steady job, I would try to be the top performer in your industry while everybody is freaking out and saying the United States is gonna, blow up, the immigrants are gonna overrun the country and, we're gonna get invaded. I would totally block all of that nonsense out, and I would focus on being the best person at your job, and maybe even go back to school and get another degree in something, or maybe, take a coding boot camp class, or just whatever you can do to refine your skills, okay? Whatever you can do to block out the noise, block out all the garbage, double down on your education, double down on building your network. I promise you, if you do that now, in 20 years, you will just be a completely different person, and you'll probably make a fortune doing it too. Oh guys, check this out. I was actually looking for this in the back of my mind. I was like, you know what, did we pass this? But we didn't, it's actually right here. Guys, this CVS, right here on Ocean Drive, is where that movie Scarface was filmed. Now, I think there's a very famous scene. I'm trying to read the sign. But there was a very famous scene of Scarface that was filmed right on these stairs right here. Anybody seen that movie? This is a very famous place. You can see tourists taking pictures. It's right here on Ocean Drive, right next to the Beacon Hotel, which is another gorgeous Art Deco building, by the way. Zozo Bob, you're right. The staircase, right there. Yeah, you can see some people taking videos of it. Now, you guys are not going to believe this. I've never seen the movie. I've never seen the movie. I gotta check it out. I gotta see it. Hey, Dr. Longiz, what's up, man? Good to see you. Happy Friday to you, my friend. Thank you for being here. NAV 407, thanks for joining us. Jimmy Boyles, you are forgetting that if you have a medical condition, you will lose all your wealth anyway. I've been on dialysis for 10 years and can tell you all about the medical system, says Jimmy Boyles. There's always going to be things that you have to deal with. That's life, man. But I don't think it's appropriate to say everybody is, going to be on dialysis for 10 years. I'm super sympathetic to your situation. I hope you get better. But I don't know. I don't think that's the attitude to adopt, is to say all these bad things are going to happen to everybody. I just don't I just don't subscribe to that. I can't let that get into my mind, man. I just can't do it. Joseph Hardaway says, I've watched that 1,000 times. I was obsessed with that movie when I was a kid. San Miguel says Al Pacino did a great job with Tony Montana in Scarface. I gotta watch it. I never watch movies. Jimmy Boyle says free medical care for anybody entering illegally. Forget tax-paying citizens, forget our veterans. Yeah, I mean, again, there's a lot of issues going on with this immigration crisis. The point I was trying to make with it is there's a reason people are choosing to come to the US as opposed to other countries. Now, the immigration system in the United States is a mess. I think everybody agrees with that. But I think the point I was trying to make is there's a reason why they're choosing our country over others, right? Now, I believe this is some sort of famous Cuban restaurant, Avalon. They always have this classic car standing right outside. Now, I think if you go to Cuba, one of my good buddies that I used to work with at the phone company took a vacation to Cuba, and he said it was the most amazing place he's ever been to. It's almost like you're going back in time. All of the cars look exactly like this. It's kind of like you're going back into an old movie. I would actually like to visit Cuba once. Hey, Vonda Howard is here. What's up, Vonda? Good to see you. Thank you for joining us. I know, Sam is, Miguel, I gotta watch more movies. I just don't have time to do it. All right, let's walk down. I want to show you guys one other building. I'm sort of blanking on where it is. I think it's on 3rd Street. Hey, Michelle K, good to see you. Thank you for joining us. This is another gorgeous building. It's called Majestic. Now, are there any basketball fans in the chat? Because I think, isn't the Miami Heat supposed to play the New York Knicks tonight? Or are they playing right now, I think? I don't know, somebody emailed that to me. And I think there's gonna be a big watch party in Central Park too. This is the Park Central Hotel. Hey, Teresa Diaz TD, good to see you. Thank you for joining us. Marketing videography says the Knicks are losing right now. Shady901 says they're playing right now. What's the score, if you don't mind me asking? Now, even though I'm in Miami, I'm not a big basketball guy, but I would definitely want the Knicks to win. I mean, even though I live in Miami, I'm a New Yorker, so. How bad are we losing? So if the Knicks lose tonight, are they out of it? Are they done? So I think it was Mike C earlier in the chat that brought up a really good point about a lot of these Art Deco style buildings in South Beach. Now, some of them that were in such disrepair, they were demolished, and a lot of the new developers are building these more modern style buildings. Now, I don't know, they look nice. It's a nice piece of property, but I just don't think it fits technically with the original Art Deco. I don't know, what do you guys think in the chat? Do you prefer these more modern style buildings like this? Or do you prefer the classic Art Deco of classic Miami? I think I much prefer the Art Deco. I mean, this is nice, it just seems a little bit out of place. Because look, you have all these beautiful Art Deco. Everything looks perfect, everything is matching. And then you kind of have this just one. I mean, again, it looks nice, it's a beautiful property, but it just looks a little bit out of place. I don't know. I like the Art Deco better. Yeah, GGMYC says love the classic a lot better. I do too. Dr. Longus says there is something about the old look in Miami. Richard Vogel says it looks like it fell from the sky and landed there. Shady 901 says I love the mix. Yeah, I guess everybody has a different preference, right? Sandra Dickens says definitely the classic Art Deco. Fabulous. Now Sandra's joining us from Canada, which, you know, I wrote about this on Twitter. I wrote a thread about this. If you want to follow us on Twitter, you can follow @WalksWallStreet. But with all of the onshoring of semiconductor manufacturing and just manufacturing in general, I think the one thing that COVID taught the world, especially the Western world, is that you need to diversify your supply chain and you need to onshore your supply chain. You know, that's why you're seeing a lot of these semiconductor companies such as Intel, Taiwan Semiconductor investing billions of dollars into building chip fabs here in the United States. And I think Canada and Mexico is going to benefit from the onshoring of the supply chain a lot. So I think going forward over the next 10 years, you're going to have what I like to call the three amigos. You're going to have the US, Canada, and Mexico. The partnership is probably going to be stronger than ever. And all of our supply chains are going to be fortified, streamlined, and onshored to North America. And you're sort of seeing this already. I think the market is already pricing this in. You know, take a look at some of the Mexican equities out there. You know, Mexico is actually outperforming that of the United States this year. It's outperforming some other emerging markets. I think it's one of the top performing emerging markets out there. You know, Mexican equities are performing really well. But that'll be a topic for another night. We'll get into some of the specific companies. Now, I think this is an aloe vera plant, is that right? Joel PM says I am loading up on Intel while it's cheap. Yeah, I think these are aloe vera plants, I believe. All right, 5th Street. We got to cross. Now, if you continue to go down this road right here where you see all the traffic, that'll actually take you over to downtown Miami, and you'll actually come out right behind, I think it's the museum. I forget which museum it is. I think it's the Science Museum. I believe it's called the Frost Science Museum, which is not too far away from the brand new arena. Now, I think you guys told me already, since you know, Sam Bankman fraud, FTX went under. Who is the new sponsor for the arena? I have no idea. And I know you guys told me yesterday. I just have a horrible memory. Does anybody know the brand new sponsor for the old FTX arena with the cryptocurrency scam? Wow, Dr. Longus says, Tom, in my city, Amazon built a huge new warehouse and decided not to open it the other day. I think I actually might have read about that in the Journal 2 weeks ago, which makes sense, right? If you've been looking at the PMI numbers that we've been covering, U.S. manufacturing sector has been in contraction. All right, Collins Avenue. I think we're going to make a right on Collins and head back up because my scooter is up this way. And we've already been streaming for an hour and a half. I can't believe that. It seems like I just turned on the camera. Well, we had a good conversation so far tonight. I think we had a lot of productive ideas, which is good. If you guys are enjoying the live stream so far tonight, feel free to leave a like on the video. Click the subscribe button if you're new. We usually do these live streams about 7 days a week between New York City and Miami, talking about the financial markets. Oh, before I forget, guys, I'm gonna try something new tomorrow, okay? If I can get the setup going. So Saturdays, for those of you who are new, Saturday is sort of our day off. We just kind of hang out, explore the different cities, and have a chat. Now, when I'm in Miami, I get around on the Vespa, right, the scooter. I think what I may try to do tomorrow is mount my phone on the front of the scooter, and I want to take you guys on a little bit of a driving tour through Wynwood, okay? So I think we should start at Wynwood, go to downtown Miami, we'll cross the bridge over into Brickell, and then we'll end up in South Beach. I'm going to try to do that. Would you guys be interested in that? I think it'd be cool because you'll see my exact commute. And I also want to show you more neighborhoods in Miami. Miami is a lot more than Brickell. It's a lot more than downtown. It's a lot more than South Beach. And I think while being on the Vespa will allow me to do that and allow me to show you guys a lot more of the city. So I ordered, what's it called? Like a little mount. So it's like a little cell phone mount. So if it arrives tomorrow, it's supposed to get here tomorrow at noon. I ordered it off Amazon. Maybe we'll try that tomorrow. I think it'd be cool. Michelle Henry's like always up for the road trip. Appreciate it. Yeah, I think it'll be cool to give a different perspective of the city. Especially Wynwood. Wynwood is an unbelievable place, especially for art. Really cool. We'll try that tomorrow, so just keep that in mind. Bree Grams, thank you so much. Appreciate it. Twitch ASMR says, do you know Spanish? I'm learning Spanish. That's one of my goals, is to be fluent in Spanish. Now, if I had a critique of the education system in the United States, specifically, I would say K through 12, we don't really have a big focus on being bilingual or multilingual in the US. And ever since I started working in Manhattan, the people who can speak multiple different languages, you have no idea how much of an advantage you have. Like a ridiculous advantage. So you should really know 3 languages. I think you should pick 3 languages and you should be fluent in them. I think that's probably the biggest disservice the U.S. Public education puts on the kids. Now, yeah, I took Spanish 102 and all that stuff, but in my experience, you're not going to become fluent in that. It was, at least in my high school, it was just a big joke, right? It was a total joke, the Spanish classes. Maybe for you guys it wasn't, but for me it was. It was just it was almost like recess, right? You go to your language class, everybody just, people bouncing off the wall. So, Travis is very true. Yeah, I want to be fluent in Spanish. I'm almost fluent in English, just kidding. Just being a little bit of a jerk. And Korean. I want to be fluent in Korean, Spanish, English. And just think of the amount of deals, think of the amount of business opportunities you can open yourself up to if you know another language, right? If you only pigeonhole yourself to English, well, you essentially leave out half the world. I can't do business, I can't talk to, and I can't communicate with half the world. That sucks. In my world, that sucks. So I want to be able to be fluent in Spanish, right? To be able to communicate with people, to be able to do deals with people, to be fluent in Korean, right? I think that should be, if a lot of people ask me do I have like something I would do over again, I actually do. I do have one mini regret, and it would be that I didn't take foreign language seriously enough, or more serious. If I was 8 years old and I had, I wasn't just worrying about playing soccer all day, I would have freaking hammered
like relentlessly learning Spanish, learning Mandarin, and learning Korean. I would just totally devour those languages. And my gosh, sky's the limit. If you know Spanish, especially in the United States, if you know multiple different languages, your area of opportunity is huge. Area of opportunity is absolutely huge. I don't know, anybody in the chat know multiple different languages? Wow. Imal says, Tom, I know 3 languages. That's awesome. Funny. Jenny Trickett says, I was learning Chinese, Mandarin, read and write. It was fun. The problem is, in my experience, the advice I was given is that if you want to really learn a language, you sort of have to be able to speak it with people on a daily basis. And that's kind of difficult for me. Hey, Beacon, New York says, Tom, did you read the news? Wealthy foreigners from Spain and Quebec have bought office buildings in Manhattan. Yeah, well, I did see that. And I'm also, well, stay tuned. That's going to be a big area of opportunity, and we've gone over this on the live stream. I think we've dedicated multiple live streams to this exact topic. There's going to be earth-shaker opportunities in commercial real estate, particularly in Manhattan and San Francisco, and there's going to be earth-shaker opportunities in big multifamily deals that were done during the pandemic and done during 2021 with very greedy investors that financed all these deals with floating rate debt. So a lot of those deals are going to go back to the banks. A lot of those deals are going to sell for pennies on the dollar, and people are going to make a fortune, right? There's always opportunity. Now, my favorite building in the city, you guys know, I don't even have to say it. My favorite building in New York City is the Seagram building. Now, I'll save that story for when we're back in New York, but do a little bit of research on what's going on with the Seagram building right now. Maybe some opportunity there. I won't give away any surprises, but just Google, Seagram building refinancing their debt. And maybe we'll talk about that on another night. But let me tell you, there's gonna be huge opportunity with that too. Stay tuned. All right, 10th Street. Maybe we'll cross here and then we'll head up. I think we have 10 more blocks before I get back. Roughly 10, I think. Yeah, because I parked right outside of the Royal Palm. Gary Carpenter says the reason why I wanted to take Spanish is because of Ricky Ricardo. Hilarious. Somebody says, does the Investors Business Daily newspaper deliver prints in other countries? That's a really good question. I'm not too sure, honestly. I want to say no. I don't know. I would call them and ask them, or maybe send them an email. If they do, they probably deliver to Canada and Mexico, because I think they print the paper in California. That's a good question. If I had to guess, I'd say no. I think it's probably only the US and Canada. But I would read that paper every day. If it were me, I would read that paper every day. I would sort of stay away from the CNN, the Fox News, and I would really only consume the Wall Street Journal, Investors Business Daily, and Barron's, because it's sort of hard to print fake news as it relates to the financial markets, because there's different rules, regulations, and I mean, unless a company's cooking their books or something like that, you're really going to get the truth. Somebody says, am I going to buy it? I wish. But no, a lot of these, essentially a lot of the landlords of these big commercial buildings in Manhattan, they're going to need to refinance the debt on those buildings. And what has happened over the last 2 years that we've talked about? Well, interest rates have gone up significantly. So that's going to be a big problem, because it wouldn't be a big problem if rent growth was appropriate, but rents are actually going the opposite way. Rents are getting a lot cheaper in the commercial space. So a lot of these, we'll see. Stay tuned. There's going to be a lot of opportunity. And I actually think over the next 10 years, that's going to make the city a much, much better place. Look at this place. Sort of like an outdoor pool. All right, let's try to make a move around here. I was actually going to say it's pretty quiet in Miami for a Friday, but then maybe everybody's watching the basketball game, right? Maybe everybody's in Brickell. Because it's usually a lot more people, even though there seems to be, some people, there's usually a lot more. Hey, Paul Tricky says, yeah, for commercial space, not rentals, you're correct. But that's the topic we were talking about. There's going to be a lot of these, and hopefully soon in the future, I'll be able to bring you guys in terms of talking about these deals specifically, because I'm going to be working some big deals in the commercial space and in the residential space with some major developers in New York and big real estate investment firms. And I think it'll be cool to sort of bring you guys in to show you these deals, show you how we analyze these deals, which I'm excited for. So stay tuned. In about a month, I'll let you guys know. I've been working like an animal for the last 3 months, and some very exciting things are happening. And this is the time to do it. I've been preaching this on the channel, like double down now, focus now. Because in 24 months, you guys are going to be rewarded. This is going to be cool. I'm going to bring you guys in on a lot of cool stuff. I promise. So stay tuned. It was about 86 degrees here today. Bright sunshine. But you know what? It has not been humid. And I'm so surprised because it's now pretty much summer. I think we're going into our rainy season here in Miami. And it's usually crazy humid, like almost inoperable humidity here. But it's been awesome. Now, although I do like the humidity, I'm kind of weird like that. I actually love it extremely hot and humid. But it's actually been quite mild, right? 86 low humidity, pretty good. San Miguel. I know. I remember those days too, man. Definitely remember those days.
No, we're not.
Wow, Christina, that's so cool. Let me take a screenshot of that comment. Hey, Bernard Conte, dude, what's up? Good to see you. Bernard says, Tom, when I was in Lisbon last week, the weather was just like Miami. Had to get away from the cold weather up here in Wisconsin. Have you ever traveled to Europe? You know what? I haven't, but I would really enjoy it. I would really, really like to go. Hey, man, I'm happy you finally were able to experience some warm weather. Yeah, Wisconsin can get pretty brutally cold for sure. I don't know, I think that's another one of my goals over the long term. I want to be better traveled. You know, I don't want to be, you know, let's say I wake up, I'm 50 years old, and I'm not well traveled. I think it's important to be very well traveled. I think it cultures you a little bit. You understand what people go through in other countries. You understand different cultures. I think it helps you from a business standpoint too, to see how, you know, different people operate. And I could say I am not well traveled at all, like at all. The only places I've really been, guys, is New York and Miami. That's it. Never really leave the country, which is not good. So I'm going to make that a goal. I'm going to make that a goal to try to be a little bit better traveled. I think it's important. I think it's worth the money to be better traveled. Yes, Steph UH says love traveling. I think the first place I'll go is probably Italy, then maybe Korea, something like that, maybe Italy. I really want to go to Naples. I want to go to Seoul. Yeah, CeeLo says, Tom, go for it. It's very important. It is. I mean, you know, I've really missed out on traveling a lot because I've focused so much on my career and working all the time. And even though that's good, you could sort of, you know, miss out on a lot of other opportunities too. Guys, my phone is going to die, so I guess we'll leave it off right here, right outside of the Carlton to Betsy, where the big orb is. But look, I think we had an amazing conversation tonight. You know, we had a lot of different opinions, a lot of different ideas. We talked a lot about the Federal Reserve and why this market is sort of stuck in this sideways choppy range. Hopefully tomorrow we'll be able to bring you guys in on the scooter to tour Wynwood section of Miami. So if you guys enjoyed the live stream tonight, feel free to leave a like on the video. Click the subscribe button if you're new. If you want to connect with us off the stream, if you look in the links in the descriptions, you can sign up for our newsletter. You can connect with us on Twitter, all that good stuff. And I want to wish you all a very blessed weekend and also a happy Mother's Day weekend for all of our mothers out there. I think moms deserve to be appreciated. You know, they are the bedrock and the foundation of the family unit. And I think it's important to show appreciation to a lot of the moms out there, or all of the mothers out there. So happy Mother's Day to everybody, especially the moms of Walks on Wall Street. God bless you all. I'd assume your family and your friends have an amazing weekend planned. And until then, guys, I'll see you tomorrow, 8:30. Happy Mother's Day weekend. Be safe. Use this time to recharge. And I'll see you all tomorrow. So Dusty Cole, thank you so much. Michelle Henry, Line Sync, British Gray. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look. Happy Mother's Day weekend to everybody, and we'll see you later.